please rise and join me in the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Good evening, everyone, and welcome to the regularly scheduled meeting of the Board of Estimate Taxation for May 2009. Times certainly have changed. We now have Channel 79 making sure that we're on time, which I guess is a good thing. So welcome. First, somewhat out of order, but an important aspect to our meeting, our first selectman would like to make a few comments. Good evening. Good evening.
I just wanted to take a moment to apprise you that this month the Greenwich High School Senior Intern Program has begun. This program provides the town and several businesses in our community and organizations actually throughout Greenwich and actually in Stamford an opportunity to have the talent of our graduating high school seniors. The Selectman's Office is pleased to have with us this year 3 interns, Lexi Merrick, Alexandra Poole, and Valerie Leone. So we are very pleased to have these 3 young ladies with us, and we did so well last year that we even have the 2008 intern Red Shareski joining us. So if you would give them a warm welcome, and we want to say thank you for doing all you do for us. Thanks.
On to our business consideration of applications. I'll call on our clerk, Leslie Tarkington, for the routine applications.
Good evening. I'd like to move routine applications AG1 for the Commission on Aging, a transfer of $11,000. PW7 for the Department of Public Works, a transfer of $300,000. FL1 for the Fleet Department, a transfer of $137,000. FL2 for the Fleet Department, an additional appropriation in the amount of $5,525. And again, I so move.
Moved by Ms. Tarkington, second by Mr. Mason. Discussion. All those in favor?
Aye.
Opposed? Abstentions? 11-0-0. I would note at this time that it's my understanding that Mr. Kelly, due to other commitments, will be arriving a little late this evening. Item 3 now comes before us. Town Assessor Ted Gortney.
Good evening, Mr. Chairman and board members. You have my report in front of you. We basically have completed accepting the applications of the elderly, senior citizens, and we are in the process now of getting ready the grand list for the tax collector. I'm glad to answer any questions you may have.
Just so that everyone is aware, under new business, obviously, we'll be taking up the senior tax relief credit in the context of the vote before the mill rate calculation. So Mr. Gortney will remain with us until we get to that point in the meeting. But if there are any questions surrounding his report other than senior tax relief, he'll entertain them at this point. Mr. Simon.
Yes, I'd asked for Mr. Gortney to provide more information, I think, on the firefighter tax credits, how many there are, and what the dollar amount is.
We have a total number of 65 individuals that qualify for the firefighter tax credit. The total cost to the town is $45,500.
And is there a maximum credit?
The maximum credit is $1,000 per firefighter. Most firefighters that own a home take it as a credit against their home taxes, and those that do not have a home take it as credit against their automobile taxes.
Thank you.
Other questions? Mr. Stone.
Ted, just because you've highlighted it as an item, the revaluation progress report, I presume you've been monitoring the debate that's been going on in Hartford concerning deferring for another year at least the requirement to revalue. Where does that stand now?
Last Friday, the governor signed the bill that would enable any community to delay their revaluation to the year 2011. So those towns that had completed it for 2008 could defer it until 2011. Those working on 2009 could, and in our case, we're looking at 2010, so we'd also be eligible to defer it for 1 year.
And while it's early on, I think before you've mentioned because of the paucity of sales that you'd be relying on, your recommendation would more than likely be to take advantage of the deferral?
Well, at the point that we're at, certainly we're deferring from 2009 to 2010. We're hoping that during the coming year that the sales will improve in terms of number and quality, and I'll be able to make a better recommendation when we have that data.
Thank you.
Further questions for the town assessor? Great, thank you.
I'll move acceptance of the report.
Moved by Ms. Tarkington, acceptance of the assessor's report for May 2009. Second by Mr. Simon. All those in favor?
Aye.
Opposed? Abstention. Should also be noted that in the audience tonight is Assistant Assessor Bob Shipman. Good evening. Item 4 now comes before us, BT Committee Special Project Team reports. In your packet, you should have received reports from the Glenville School Building Committee, the Ad Hoc OPEB Committee, Audit Committee, Nathaniel Witherell Town Building Committee, Human Resources Committee report. That's the Human Resources Committee of the BET. Any questions or comments relative to those reports? Question for Mr. Norton of the Glenville School Building Committee report. If you could give us a little bit of information on the status of the photovoltaic roof and where we are in that process.
It's going to be discussed tomorrow. The Glenville School Building Committee meets tomorrow morning at 7:30, and it's on the agenda to discuss it. Last month at the meeting, Alex Hillman, representing the Greenwich Energy Task Force, appeared before us, and he indicated that he was going to do an analysis of the available programs, I guess, including additional funding, and report back to us at our meeting tomorrow.
Thank you. Mr. Simon.
So at the moment, though, we're not committed to going this direction. We're committed with the regular roof at the moment. That's our plan?
Yes, because the reason for that, Larry, is that it was presented to the Glenville School Building Committee last month when it met on the 21st of April, because it's part of, as I understand it, coming from the stimulus program from the federal government. So that the committee had to go back and make certain that we could proceed with this. And that's the point at which we are, and a decision that you're asking for, I believe, will be made tomorrow morning.
Okay.
Other questions? Mr. First Selectman.
The funds that are available are part of a stimulus grant, and we have to make application. The deadline for that application is on June 25th. So there's considerable amount of work that goes into this submission. So if we're going to apply it to the Glenville School, we have to, one, see if it's feasible from a construction point of view, and two, it will result in increasing the town's obligation because it's only for $627,500, of which not all of it would be applied. I think the energy management team actually is what we refer to, the entity that Art talked about. It has some other ideas. This seemed to be the most viable one because it's a direct application of the funds into a system that's going to generate a return rather than applying it to several other smaller initiatives that you have to present each and every one. What we're finding out is the stimulus program is extremely labor intensive and bureaucratic, and so our thoughts are to how do we best apply and get the most bang for the buck. But tomorrow's the first step. I know Frank Mazza has been working with our town administrator, Turner Construction, and we are going to have a meeting of the energy management team following the building committee meeting to discuss if, in fact, they wanted to take somewhere in the neighborhood of $75,000 of the total grant of 627 to use it to help with some of our energy efficient initiatives that we have identified.
Mr. Chairman,
Thank you, Mr. Norton.
it was implied to us at our meeting last month that there are additional grants available, and that's what the implication to us came, that the Energy Task Force would pursue those additional grants.
That's correct.
Other discussion on this report or any other? Item 5 now comes before us, the Comptroller's report. Our Comptroller, Peter Mynarski. Good evening.
Good evening, Mr. Chairman, BET members. 3 quick points on the Comptroller's report. Last paragraph in the retirement board, the last sentence I refer to the September 1st, 2009 deadline date. Technically, the employees that wish to retire have to June 30th to file with the retirement administrator, and they can retire up till September 1st. And speaking with the retirement administrator, the guess of 30 to 40 is based on the fact that he's already had 54 people approach him. He's only got about 15 firm commitments, so it's based on his conversations with the others, the people that are out there that are eligible to retire under this incentive program. Second point is the Nathaniel Witherall Long-Range Business Plan is later on the agenda, so I won't take any questions now. And then thirdly, based on some questions that Mr. Simon posed in last month's meeting for the BET, from the BET, on the March Treasurer's Report, the change in the June 30th cash balance, we revised and then revised again the cash flow, and I've passed it out. And real quickly, I'll try to explain 3 of the major differences. Number one, in the cash flow, there was a figure of $2,194,000 for the retirement administrators true up, the expenses for the retirement administration, plus the management fees, et cetera. That will be booked and shown in the CAFR as an expense through June 30th, but the cash will not be transferred till shortly thereafter, between July 1st and July 6th or 7th. So we had that $2 million in cash. So the expense will be there, but the cash will not be transferred till a couple days later. Number 2, the cash flow report was picking up $1.8 million for Glenville School reimbursements. The Glenville School reimbursements, unlike the Hamilton Avenue reimbursements, cannot go to the general fund. They can only be used to reduce future bonding. So that had to be taken out. The cash will be received, but it won't go to the general fund. It's going to go to the bonding fund. And then the third piece that changed the June 30th balances was in March, there was a very large check run for 13.15 payments, and the treasurer became very conservative and changed the May and the June estimates. And that's how we came up with the 12.1 cash flow that went out in the package. We went out last week, there was 5 of us working on it, and we decided that we were too conservative in that area, so we adjusted that. And we reduced it from $9+ million down to 8 and change. And we came up with the new number that's before you for $14.9 million. So that's basically the 3 changes in the cash flow, and I'll take any questions on the first or the third item, being the retirement, or this cash flows, or the Controller's report.
Question for the Comptroller. Mr. Simon.
What is the process involved if the retirement board currently pays 7% interest on employee contributions?
Since 1986.
Since 1986. And we did this because it was an option whether people wanted to make contributions to the retirement board or not. I think sometime in the early part of the 2002, we made contributions mandatory for people, or else they couldn't make contributions at all. And now we're paying 7% on money that employees give us, and that's a very attractive interest rate. What is involved in changing this interest rate to a 3 or a 4% interest rate number?
To change it. Step one, it's going to be on the agenda for May 28th.
For the
It'll go
retirement board? On the
Retirement,
retirement
I'm sorry,
board.
the retirement board's meeting on May 28th. It'll go hand in hand with the discount rate, the interest rate assumption that we presently use for 8.5. And when the retirement board looks at changing the discount rate or any other assumptions, this will be part of the agenda. That's the process. And the retirement board will vote. I'm not sure if there's a conflict with two of the members. There's 5 trustees. I have no contributions. There's a policeman and a fireman who have contributions, so I don't know if they can vote to change that interest. But in the absence of their vote, there's 3 other votes. That's the process. It'll begin on May 28th, and it'll go. We'll coordinate it with Greg Stump from EFI, the actuary, and we'll have a vote on whether to change that and the other assumptions.
Because in theory, that if someone now has to make mandatory contributions, the interest we pay them would not reflect their benefit anymore. Because they would get the full benefit because they have mandatory contributions, and you can't have a deficiency anymore.
Mm-hmm.
Other questions for the comptroller? Mr. Mason.
Peter, real quick on your cash flow forecast chart. You have on the first column budget 339,371, and if you go over to the right hand all the way over, it says that we're 13.5. But if I go with that forecast at 338, I'm off 1.2 million. I only show.
You're using, that's
Just-
been revised.
Okay. Okay. All right. So, and you say that number's going to come in at
329 with a variance of about 9,227,000, which ties into Roland's monthly
right.
cash flows. Again, he's picking the top 3, the conveyance tax, the interest income, and the building. This takes everything into account, and there's a lot of plus and minuses, so that's a net number.
Thank you.
Other questions? Is there approval of the comptroller's report? Moved by Mr. Norton, second by Ms. Tarkington. All those in favor? Aye. Opposed? Abstentions, 11-0-0. The treasurer's report. Questions for our comptroller? Approval of the treasurer's report. Moved by Mr. Norton, second by Mr. Mason. Discussion. All those in favor? Aye. Opposed? Abstentions, 11-0-0. Item 7 now comes before us, approval of the BET minutes for April 20th of 2009.
Mr. Chairman, we should add that it is the minutes that are before our members at their desk and that were emailed to them earlier today.
There was some change regarding a resolution that was added to the minutes. You should have all received a copy of what I'll refer to as the amended minutes. Any discussion? Is there approval to accept the minutes as amended? Moved by Mr. Raymer, second by Mr. Finger. All those in favor? Aye. Opposed? Abstentions. Mr. Raymer, did I just give you credit for something that you should? It won't happen again. Item 8 now comes before us. Ms. Tarkington?
No, I have nothing today.
Mr.
Thank you.
Stone?
Mr. Chairman, just one thing. I guess it's a reminder, and it's based on a notice that came through both in the minutes of the ad hoc OPEB committee, but also in the controller's report that Mr. Simon, who's currently a trustee, a member of the trust board of the OPEB trust, will be, let's call it, his position is terminating as of the end of June. We are in receipt of one curricula vitae for a potential replacement for Mr. Simon. And while you know from the past that we've been looking for other potential candidates, I'm reminding you right now, if you have any that you've been sitting on, please forward them to us as quickly as possible. Thank you very much.
Very well, thank you. For the chairman's report, obviously May is a busy month. Delighted that the RTM passed the budget with very little change other than what amounts to a $215,000 cut. This month I was fortunate enough to meet with the Northwest Greenwich Association. The title of the presentation was, "Where Are Your Taxes Going?" It was interesting to learn and listen from the Northwest Greenwich Association concerning their concerns and observations regarding the budget process, and in fact, most notably, the elimination of the King Street Fire Station from the budget back in February. I was also met with the fire department and the first selectman, along with Bill Kelly of this board, to discuss the Northwest, to discuss backcountry fire protection in a separate meeting, not with the Northwest Greenwich Association. And those discussions are going along quite nicely. We've made a significant amount of progress, and the fire chief is coming up with many alternatives that seem to have some traction, and in fact would result in less of a financial burden going forward. So we'll keep you apprised as the first selectman and the fire chief work through some of the details, so that we can continue to have an ongoing discussion of this important item for backcountry fire protection. Also, you should know or should have received from the PTA Council that invited to their event. It happens to fall on the same night as our BET meeting in June 15th, I believe. And therefore, there's been a proposal to start our meeting at 5:30, so that in fact we can attend as a board that event. My recommendation to this board, but certainly want to hear feedback if in fact there's any objection to starting our meeting at 5:30. I have cleared it with the people upstairs, that is Channel 79. They have okayed the change. And so does anybody have any strong concern or objection to starting next month's meeting at 5:30? Just June. Just June. Okay, hearing none, we'll officially set our meeting in June for 5:30. I'm sure the staff at Town Hall won't object to this either. You should also know we're working on celebrating the BET's 100 years at our July meeting, and that announcements to follow. And then it's still the hope that we would not need an August meeting, but we'll determine that as the months proceed. Moving on. Item 9, old business. Item 10, new business. First item on our under new business, Nathaniel Witherell long-range business plan resolution. Mr. Kelly's walking in. He should have walked in under the fire department. He's now walking in under Nathaniel Witherell.
My daughter just graduated.
Good evening. Congratulations. This is probably inartfully worded. The topic before us, and I appreciate Ray Augustine is here on behalf of Nathaniel Witherell. This first item addresses the desire of the BET to review the long-range business plan with consultants, and I'll turn it over to our comptroller, Peter Mynarski, at this time.
Okay, previously referred to tonight and reported previously in a prior month. In the comptroller's report, I contacted 5 different firms. There was 2 of the firms that, two of the firms declined, and we got the list down to 3. One of them was Weiser LLP out of New York City. They bid $45,000 plus out of pocket. There was Health Dimensions Group Consultants. They bid $67,500 plus out of pocket. And then there was McGladrey and Pullen, who bid $79,000 out of pocket. The Roland and I interviewed the three firms over the phone, make sure there was clarity on the scope of services, which we emailed to them. And Roland and I met with Steve Walko and Bill Finger at our monthly personnel/business meeting before the BET Budget Committee. And again, Roland and I presented our case. We felt that self-admittedly, two of the firms were not qualified for different reasons. And we recommended Health Dimensions, and I guess Mr. Walko concurred. So that's where we are right now. We've got $50,000 in the budget for this item, and the firm we picked was 67.5. There's two items in the budget that we deferred spending on. One is a deferral, which is the appraisal for fixed assets based on GASB 34, which was pronounced about 5 or 6 years ago. I think it's $40,000 there, and we've got about $30,000 in auditing fees. So we've got enough money to cover the 67.5, and I know that based on a conversation I had with Mr. Norton prior to this, there will be a small expenditure for the second item to follow this on the pro forma from Bloom and Shapiro. So we have enough money, and the Finance Department recommends to the BET the hiring of Health Dimensions. And I think Steve has an add-on as far as additional help from the BET as far as oversight.
All right, so let me just, to get it on the record, let me state the resolution and see if there's a motion to approve this resolution, and then...
Mr. Chair, before you do that, could I ask a question?
Sure, let me get the resolution before us, and then...
Okay, well, it involves the resolution.
Okay.
Because there's a discrepancy in where this firm is located between the controller's report and the resolution.
This address is from, all these firms have multiple locations. This was from the proposal, this address.
Okay, because your
Yes.
controller's report indicates they're in Chicago.
Okay. That was the original conversation. The proposal came from this area. The same thing occurred with McGladrey and Pullen. We were on the telephone with the Boston office, the New York office, and the Hartford office. But in this case here, the resolution is where the proposal came from.
Okay, so that's the office that will do the...
Yes.
Thank you.
Resolved that the BET authorizes the comptroller to engage the firm of Health Dimensions Group, 7101 Northland Circle, Suite 110, Minneapolis, Minnesota 55428, to perform a feasibility study of the Nathaniel Witherell Long-Range Business Plan. Further resolved that the fees for this engagement will be capped at $67,500 plus direct expenses for travel expenses, lodging, and ancillary usage, e.g. data acquisition. Is there a motion to approve this resolution? Moved by Mr. Simon, second by Mr. Mason. Discussion. It's Mr. Finger and I did in fact meet with the comptroller and the budget director in terms of selecting a consultant. The sense is that the consultant would report to a 4-person subcommittee or group of the BET, at least initially, and obviously ultimately make its recommendation to the full BET. We're optimistic that they can get the work done over the summer months for a report back to the BET around the September-October timeframe. Is that correct, Mr. Moneski?
I actually got quotes from two of them. One is they're all in a 6 to 8 to 9 week range as far as doing the work. That's under the assumption that I can get this contract out real quick, and there's nothing that occurs between now and then that deviates from the scope of services.
Other questions or comments? David Ormsby and Lloyd Bankson from the Nathaniel Witherell Board are here tonight. We're taking up the issue of the BET's usage of Health Dimensions as a consultant to review the long-range business plan, where that item is now before us on the table, and we're in the discussion phase of that. Other.
I thought we were later in the agenda. We apologize for being late. We've been having a sandwich for goodness.
Everything that the BET does is efficient.
It's on tape, right?
No, it's live. What kind of sandwich? Let me ask you a question.
Mr. Kremick.
I assume that the reason you recommended this firm was because of its knowledge and background in the nursing home industry?
Yes, plus the other two somewhat admitted to the fact that they didn't think they could handle the assignment. They cited specific areas where they might be have a shortcoming, and actually, it repeated itself. And some of the other people that declined, they're afraid of the construction industry, and as far as the how volatile it is now, as far as predicting prices, either up or down, and there is a fear out there as far as accuracy. So. And I guess the key with Health Dimension is they were here before and did some work prior.
That's right. I remember that. And so they have comfort that they have a background and skills
Yes.
to perform the engagement.
Yes.
As I've stated before, but just to make a point of this, the goal here is for the BET to become comfortable with the business plan as laid out by, or I should say the revised business plan as laid out by Nathaniel Witherell, so that in fact we can move this process forward, that the revised business plan can then be approved by the RTM, so that there's a level of comfort going forward with Project Renew, which we anticipate to occur outside of the budget cycle over the next fiscal year. Mr. Stone.
Just a little bit further to Mr. Kremick's question. Pete, do you feel comfortable with the competence of Health Dimensions based on, let's call it the research you did concerning this particular area? We're down to a very small number of possible candidates for the engagement. Health Dimensions did the work before and did some work before. Have you heard anything to basically confirm that they're still competent?
I feel that they're, to the best of my knowledge, based on the work I've done here. I'm not an expert in the nursing home field, but I believe they can do the work. Yes.
Thank you.
All those in favor?
Aye.
Opposed? Abstentions? 12-0-0. Peter, in the context of this now moving forward, this contract will then continue to be reviewed by finance and purchasing and then head off to the law department?
Yes.
And when do you expect it to actually go out?
I started work on it last week, and the purchasing agent is on vacation, and she handed it off to her assistant, and we started working on it last week. I'm going to try to get it out within a week, the end of this week, as far as getting from purchasing to the law department. And I've got the risk manager working on the insurance requirements.
Okay. When that's done, it should also be, once the contract is finalized and sent over, make sure it also gets over to the Nathaniel Witherell board, because I suspect that there will need to be a preliminary meeting about information that's needed surrounding what Health Dimensions is going to need for their report.
Actually, Roland has already been doing that for the last month or so, and we've gone back and we've got some of the prior project renewal documents, the NTEC study, a whole series of documents. So we've already started that. But to your suggestion, we'll touch base with Lloyd Bankston and the Ray Augustine.
The next item that comes before us under new business is the creation of a revolving fund for Nathaniel Witherell, to which, why don't we start with Budget Committee? The Budget Committee took this matter up.
As you know, a little background on this item. This was an item that came up during the discussions about the capital project there and the overall operating and it was a recommendation, and it's been worked on over the wintertime and throughout the budget process, and we had a draft come before us. We had some questions on the approval of if we do decide to do this RTM or not, and that went to the law department, and we've got an answer back on that post-budget committee meeting, but we had a discussion on it. Basically, the idea is it would be to set up a revolving fund for Nathaniel Witherell where we could keep track of expenses and income, basically on one page, similar to our golf course. This one will be a little bit more complicated than that, but the budget committee had discussions on it last Tuesday night at our meeting, and had thought it should go to audit committee because it was a governance item, and we sent it there, and we had just a few comments on some language that we wanted to see coming back, and I have also moved those comments on to Mr. Fox in the law department, so he can assure that they get in there, at least the substance of them get in there. And then from us, it went to the audit committee.
Mr. Norton, Chairman of the Audit Committee.
Yes, Mr. Chairman. The Audit Committee considered this item at its meeting last Thursday, and we were assisted by members of the board of Nathaniel Witherell, and also, fortunately, we were assisted by our outside external auditor, Ms. Vecito from Bloom Shapiro. And we had an extensive discussion on this particular proposal, and although we voted for nothing, we voted to support it with that vote without a specific approval date. As it is known that before we engage the external auditor, we have to have an executive session with the external auditor in which we discuss what the objectives of the audit committee are for the audit to be for the fiscal year 2009. And both during the formal presentation we had, or the public meeting we had, and subsequently in our executive session, the concerns that we had that from our external auditor were that she would be providing us with some assistance and also some guidance and points in which we consider. And so we believe that it's prudent that we get a business pro forma provided by our external auditor, Bloom Shapiro, and that be presented back to us prior to our meeting on June 11th. So it would be our recommendation that we proceed with this, but we also wait until we get the business pro forma provided by the external auditor, just so that we have an understanding of what this is going to cost, how this is going to be structured, and whether or not this is going to be a major fund going forward.
Other discussion on this item? There was considerable discussion, I know, over the weekend and then even last week concerning the timing of this. So I just want to make sure we're on the same page going forward with this. This has been presented to us as a first read. Obviously, the BET considers this to be an important item. Obviously, setting up a revolving fund of such a magnitude is very much, in some regards, different from the golf course, although the golf course is a good departure point. The Nathaniel Witherell has certainly been an advocate for such a revolving fund for many months, if not years. And I think the general sense of this body is to try to move forward in a constructive manner to try to implement a revolving fund. That being said, because of the importance of such a fund, both the Budget Committee and to some degree the Audit Committee is seeking to make sure that this is fully vetted. My understanding is that in order that the Nathaniel Witherell Board, and I'm not sure about this, but that might not need to go before the RTM, but it's your decision to, in fact, take this to the RTM. I could be wrong, and maybe you'd like to comment on that in the context of if, in fact, we vote on this in June, that the RTM would not vote on this until September potentially, and that we would just account for that by, say, as of October 1st, going back and creating and establishing the revolving fund. Do I have that right, or are we on the same page?
Well, we're maybe on different parts of the same page.
I'll take it.
We, because we had a cutoff date of last Friday, I think, to get on the call for the RTM meeting on June 8th, we submitted a resolution to the town clerk, which I assume will be on the call for the meeting on the 8th of June. That meeting, or that resolution that was submitted, was drafted by the law department. on Roland and I assume Peter's at their request. It dealt with, so far as I know, the only substantive issue that I have heard raised, and that is whether if the revolving fund is created, it somehow is or segregates from the general fund the results of operations of Nathaniel Witherell. And I think we have all agreed, and the resolution specifically provides that monies in the revolving fund are available to the general fund for any lawful purpose. I frankly don't know what the other issues that have been raised are. For us, this is really a financial presentation issue. It's a transparency issue. I really defy anybody to take the audited financial statements of the town of Greenwich and tell me from reading those whether the Nathaniel Witherell operates profitably or not. And I think part of the thing that is driving our concern here is I've got a very discouraged board of directors who for 2 years now has operated the Nathaniel Witherell profitably. And there is a wide misapprehension in town, I think, that the Nathaniel Witherell is supported by large funding from the town of Greenwich. And we would like to see a financial presentation consistent with whatever requirements you attach to it that are reasonable, which shows simply by looking at an income statement that for 2 years now our revenues have exceeded our expenditures. And we think that the presentation of a revolving fund would demonstrate that. But to go back to the specific question you asked, the resolution is before the town clerk, and in my own thinking, if your committees and the full BET were to meet on the 15th and approve the revolving fund, I would ask the RTM to amend the form of the resolution that we've submitted, which simply adopts it subject to the prior approval of the BET. And I don't see any reason if they did it in that form, we couldn't start on July 1 with a revolving fund if all the other items have fallen into place.
Mr. Kremick?
As I understand it, and I could be wrong about this, but what I've heard is that it's quite possible that we don't have to go to the RTM at all in order to do this. The BET has the authority to set up accounts the way we believe it should properly be set up. But if in this procedure you're going to the RTM first for their approval of a resolution to set up a revolving fund, and then you'd have to come back to us to set up a revolving fund. And my question is should we get a write-off from the sign-off from the town attorney that that's an appropriate way to proceed? As far as I know, it would be appropriate because the RTM's approval is just to the concept of setting up a revolving fund for, it's almost like a sense of the meeting resolution, whereas the resolution that we would adopt would be actually to establish the fund. But I'm just suggesting that we should probably get some guidance from the town attorney as to whether my assumption is correct or whether, in fact, it would be necessary at all after assuming the RTM passes the resolution in their June meeting and assuming we set up the funds in our June meeting, whether it's necessary to go back to the RTM at all at that point.
Well, we are at the RTM only because we did inquire of the law department whether it was required, and there was a certain amount of indecision on that, but the final conclusion was that we are best advised to have this approved by the RTM. If there is contrary advice, why, I agree with you.
Mr. Kremick, sure.
I don't mean to say that you shouldn't go through this procedure. It just seems to me that you will have already gotten a sense of the meeting resolution from the RTM at its June meeting. And so when you come to us afterwards at our June meeting And assuming we decide to set up a revolving fund for you, I'm not sure there's anything else that need be done. And I would assume that the town attorney would confirm that, but I think we should at least ask.
Okay, understood.
Mr. Bankson.
If I may. This has been debated for quite a while, and I have here with me a law department memo signed by Eugene McLaughlin. And one of the issues it considers an accounting change as opposed to the full enterprise fund. And he states, this can be accomplished without a charter revision under Charter number 10, which allows the controller to set up the form of all accounts for the various departments. Budget and interim appropriations for Nathaniel Wither would continue through the normal process of approval by the Board of Estimate and Taxation. So this, by this read, would not need to go to the RTM at all, and that Peter could make this decision. Now, in talking with Wayne Fox, his thought was the right thing to do is to go to the RTM, but it's not clear to me, based upon Mr. McLaughlin's note here, as whether that's for an approval or just to advise.
So, just let me talk about the process a little bit. I'm not sure I'm not sure the issue whether or not you want to bring it in front of the RTM is probably before our body. Certainly, we have the obligation to make a decision based on the submission, which we will do at our June meeting, and how it proceeds into the RTM, I think is for an interesting discussion with the law department. That said, my understanding is from the audit committee, there was a request for a pro forma. And so in trying to get as much information prior to our BET meeting, which one will help maybe the RTM discussions if you in fact wish to remain on their June calendar or not, but certainly so that we can have communications with those RTM committees that are taking this matter up. I'm just trying to make sure that the process works. And so my suggestion would be to have any comments or questions regarding the fund within 3 business days after the pro forma is issued, because I think that's the last sort of pieces of information that we're looking for in order to pass on this resolution and any follow-up questions that might result. So does anybody have any comments or questions regarding that possible time frame?
Mr. Chairman, what I was going to contribute is that we were advised by Bloom Shapiro that if this were in effect passed by the various bodies subsequent to July 1, it could be effective retroactive to July 1.
I think for the purposes of clarity, however, if in fact we can institute this prior to July 1st, I think Nathaniel Wither would like that to happen. If it can't be, it can't be, and I think from everything that I've been told through the Finance Department, that's in fact correct, that there will be no quote-unquote harm done if this in fact passes the RTM in September. But if we can move the process along in an orderly fashion, get information out there that people desire, and get questions answered, then in fact we should do that. And if we can do that within the time frame, then we certainly shouldn't be the impediment, other than our meeting is June 15th. And Ms. Tarkington.
I was just going to ask that perhaps the memo that Mr. Bankson quoted could be also circulated to the BET members. And also, since I haven't seen the memo, I wondered if that accounting referred to enterprise accounting, or did it refer to a revolving fund? I haven't seen it, so I don't know what for sure. I think it just would be worthwhile for us to see the memo also. Thank you.
Mr. Raymer.
I have a recollection of the conversations at the audit committee had the anticipation at the time that we took the vote that the revolving fund would have an inauguration date of July 1st. I don't know that we heard from the representatives tonight at Nathaniel Wither whether or not the procedure that you're outlining is going to result in a problem with our being able to actually inaugurate this for this July 1st, or whether we could end up in a situation where it bumps over for a year to July the following year. The conversation with Vanessa Rizito at Blum Shapiro was more in the nature of getting a pro forma and also some other suggestions from her, which we thought we could incorporate into the bookkeeping function by the time that the first quarterly reports are being filed. But I don't think it was the expectation of the 4 members attending the audit committee that we'd end up with a result that this would not be able to start for July 1st. Do we know from Nathaniel Witherell whether or not you're proposing something that might have the result that we end up bumping over for a year?
I haven't had the direct conversation with Nathaniel Witherell, but I guess we can ask them. But I have gone to the finance department, and they, in fact, have assured me that this would have no consequence or ill consequence of having to move it over a full year, that you could start it up, say, October 1st, if, in fact, you had to wait till the September RTM meeting, and then simply account for what has occurred between July 1st and October 1st. Your comments regarding the audit committee, however, do not take into account that the budget committee, which also took this matter up and in fact took it up first, did not pass judgment on this and in fact wanted the additional month to review it before it being voted on for final approval. And so historically, whenever any committee, whether it be budget committee or audit committee or any of our standing committees, decides that they need additional time and there is of little consequence or no significant consequence to that decision, then we have generally taken our time to review it. Does Nathaniel Witherell have a different opinion as to whether or not this adversely impacts their ability to implement this October 1st or then retroactively going back to July 1st?
The only comment I would like to add is a point that hasn't been made tonight, is that we need a trial balance for Medicaid and Medicare reporting. We've sort of gone along on Ray's books to get this done, but we actually do need to have a trial balance. Ms. Rosito clearly understood this. And I think when she reports back to the audit committee, she will be very much in favor of doing it. That was the tone she gave to us. Now, we were not a part of the executive session, but this is something that we don't just want so people can see how we're doing. We actually need it for business dealings with Medicaid and Medicare. And so for us to get this implemented effective at the beginning of the year, even if it's done retrospectively, is very helpful to us. Thank you.
I think we're committed to working with Nathaniel Witherell with the RTM, and to the extent that we can facilitate those discussions over the next month or less than that, we will certainly do so. One of the goals here, and this is more directed towards Mr. Norton and the Finance Department, is to ensure that to the extent we can get the pro forma as quickly as possible, that would be helpful. From that time, it'll be dispersed to the BET members, and then I would ask 3 business days later any questions or comments regarding this fund be funneled through the Finance Department. Mr. Kelly.
Just one observation. I would certainly recommend to them that they go to the RTM, because if they have to go, it takes care of that hurdle. If they don't have to go, it certainly informs the public, and you get a public vetting of this issue. It's discussed. It's not a surprise to anyone, and you answer all the questions. And their reaction will certainly inform us when we make our decision. It's always helpful. So.
Okay, so moving along. The next 2 items are very much intertwined. The first one being resolution of the senior tax relief. This says CAP. For that, I will call on, well, Mr. Gwartney, do you want to make an initial just presentation to tee this matter up? This came through the assessor's office, and so maybe you could just go over at least the beginning part of your numbers, and then I will entertain a motion.
Basically, we listed on an Excel spreadsheet all of the applications that we had to date, and then we broke them into categories. And the first category was up to 24,000 income range, and then 34, almost 35,000, and then 24 to 36,000, 36 to 39,000, 39 to 50, and 50 to 60. And for each of those ranges, we showed the number of applicants and the amount of credit revenue that would be required, and the cumulative amount. And what we're looking for now is a decision on how to administrate this.
Okay, so the senior tax credit came before us to all of you who might have forgotten back in December of 2008, and then the RTM in 2009, with the understanding that the resolution providing for, in fact, that we would take this matter up annually at this meeting, what is most notably the mill rate calculation meeting. And to that extent, this is the first time this is coming before us in this fashion with those changes and with the changes also to the income levels and the like. And so before us now is a discussion, and like I said, I would entertain a motion regarding the amount of the credit to be offered, which would then obviously play into our next discussion, which is the mill rate calculation. And to that extent, Mr. Krummick.
Yeah, I move that we fully fund this program, that all the eligible applicants receive the full amount of the tax credit to which they're entitled.
Second.
Moved by Mr. Krummick.
Oh, I'm sorry, I didn't do that publicly. Just so it's clear, I think we should fully fund this program, and that's my motion, that every eligible senior who has applied for a tax credit, that the program be fully funded.
It's been moved.
I second it publicly, too.
It's been moved by Mr. Krummick, second by Ms. Barton, to fund the elderly tax credit. And the amount then would be $881,777. Are we using the numbers from the Finance Department? Okay.
Actually, that's why I made the motion generally, because I know we have, I know we have different numbers.
Okay.
But I was looking at the handout we received, the elderly tax credit application number, and fully funded, here it shows 881,777. But regardless of what the exact number is, my motion is that it be fully funded.
So just to frame the discussion, my understanding is, Mr. Gortney, and I guess this came to light sometime this afternoon, that the methodology that the assessor's office used in calculating the tax credit is different from the opinion of some on the BET concerning how tax credit should be provided for those who have applied in prior years. Would you agree that that's sort of just the general discussion since about 4 o'clock this afternoon?
Yes.
Okay. So my understanding is that the tax credit that was applied for applicants who applied last year was simply to roll them forward without giving them an increase based on the new senior tax credit resolution. Is that correct? Yes. Okay. And that the contrary opinion is that the tax credit as presented in the current senior tax credit resolution should be applied and should be increased if in fact the individuals had applied, and therefore there's a difference in the numbers between one sheet that Mr. Krummick referenced, which is it looks less like a spreadsheet than the other sheet, which I think is from your office, indicating that to fully fund this, that would give a tax credit to everyone who applied with an income level of $60,000 or less, and that number was $857,000, and obviously I'm rounding, compared to $881,000. So that's the issue, so that we're all comfortable at least with understanding what the difference of opinion is here. Do all the BET members understand the difference in the two sheets that have been provided? Okay.
No, but I don't think you have the right. Those couldn't be the right numbers that you read. We added the difference between the 730 and the 682 is $48,000. And that number should fall to the last number you read off of both sheets.
Well, for whatever reason, it's not. I'm just reading off of numbers. I'm not making any calculations at this point. I understand your point, but it does not add up. So we're somewhat in a conundrum. In a perfect world, we would approve simply the maximum. I'm now speaking to some degree to Mr. Crumick's proposal here, or a resolution, is to fully fund it, and we would normally just put in a specific number, say the 881, vote on that number, and proceed without getting into at what level we're funding it at, because it would be the cap to the credit that we would be voting on. However, this year, it's not that simple, because if in fact the BET wishes to ensure that individuals who made application last year are fully credited or offered a full credit, then we would have to use the numbers on the top sheet plus some variance, plus some additional amount to ensure that you're fully funding it. Is that an accurate statement? Mr. Simon, I know you worked on these numbers.
I think, can I just ask a question? This chart came from, the second page came from the Controller's office? Assessor's office, and the two numbers that you see below here, the 112 and the 38, under the 39 to 50 and the 50 to 60. You see the 112,646 and the 38,514. Where did those come from?
That was on the schedule from last week.
All right. So
those numbers now, instead of 151, 160, are 175, 800.
Say that again?
Instead of the numbers being 151, 160, they're now 175, 800.
I'm lost.
On the first page, just so everybody's clear, on the first page, we're going to refer to them as page 1 and page 2. Page 1 is entitled Town of Greenwich Elderly Tax Credit Applications for 2009-2010 fiscal year. Page 2 is entitled May 18th, 2009 Elderly Credit Estimate. Okay? So, Mr. Geiger, my understanding is from what you just said was that on the right-hand column under tax credit, where it lists 151, 160, it should be 175, 800?
Right. Those are the numbers that the assessor prepared.
That, I agree with that.
Okay. Which would then change the bottom line number to what? Instead of 881, it changes it to
906,000. 906,417.
Roland, there is no change to the 730 number, or is there?
No, the 730 number we fixed.
So, if I'm understanding Mr. Crumick's motion, it would be to approve a senior tax credit cap of $906,417.
That's correct. If that's what finance says it would be necessary to fully fund the program, then that is what my motion is, to fully fund the program, that all eligible seniors who have applied and are eligible for the program, that they receive the full amount of the tax credit.
Mr. Finger.
I still am confused, because if we're saying that the number on the first sheet of $730,617 is correct, and we move over one column to the left, that's based upon a number of applicants of 534. If we go to the second sheet, we have 565 applicants. So not only do we have the dollar amount in question, we have the discrepancy between the number of applicants on one sheet and another sheet. So I question whether the 730,617 is even the correct number.
Mr. Raymer.
Can we solve this by, assuming we otherwise, as a body, wish to approve the cap, why can't we just solve this by approving a dollar figure or such lesser number as the assessor's office determines are qualified applicants? So we're approving, in fact, a cap, but not necessarily an expenditure in the full amount of that. And then we can act on this tonight without having to deal further with this conundrum, to use your expression.
I think the concern, regardless of where you want it to be, whether or not there's full support for Mr. Crumick's position and Ms. Barton's position, or any other category of limitation on income, the concern is that you do not. The resolution suggests that we set a limit, a monetary amount, and therefore you would have to add a certain percentage above these numbers to ensure you capture it, because the concern isn't going above the number. The concern is that you're not capturing all of the people within the range in which you want to capture. So, for instance, just to stay on Mr. Crumick's amendment, if we approve the 906, and in fact that number was 910, we would not be able to give a credit to $4,000 worth of credit to those individuals, where our true intent here, according to Mr. Crumick, would be to fund everybody within that limit of $60,000 income level. So I'm trying to avoid that type of scenario.
Mr. Chairman.
Mr. Crumick.
That's precisely why I worded it the way I did, because there is a discrepancy in terms of the numbers. And I think that the way this would work is, however we end up capping this program, I think that we can set the limit in that way, and then when we get to the mill rate, in terms of setting the mill rate, it would reflect whatever we did, hopefully.
Okay, so I've had this discussion with the law department, and they absolutely require us to plug in a number, and we can further limit that number by saying something to the effect of, if we're going to use our $906,000 as what's before us, that you would approve an amount not to exceed 910, let's just say, for argument's sake, with the understanding that no tax, well, in this case, because it's at the limit, you would just do it not to exceed a certain number above that amount. If that motion fails and we deal with a motion that addresses a lower income bracket, there would need just a simple caveat. You would go above, again, what these numbers show, and then say not to exceed the income level applicants of X. So in terms of ruling your motion in order, I need a number, and if you wanted to address everybody who filed an application, then it needs to be a number somewhat higher than 906, and with the caveat not to exceed. Mr. Crumick.
Okay, in view of that, I'll take the number 910 as the number not to be exceeded, with the expectation that that would be fully funding the program for all eligible applicants.
And I take it, Ms. Barton, you agree with that?
I second that amended motion.
Further discussion. Does everybody understand where we're at? Mr. Finger, you're gonna put a monkey wrench in this.
Well, again, I point to the discrepancies between the two sheets.
I can comment.
One of them has 811 applicants, and this 906, even if it is based upon 748. I mean, there's a huge discrepancy in the number of applicants. So if the intention of the motion is to cover everybody who's eligible up to 60,000, I'm not sure that the 910 would accomplish that.
I'll comment on that.
Mr. Simon.
So, having been the author of the numbers that were incorrect in part, there are actually 811 applicants that have been approved, including 229 that were 2007 carry-forward applicants. And I just looked to Mr. Gordon to confirm that. All right, so what we did was we took the people under $39,000. That were because only the people in the prior program were, $39,000 was the cap in the prior program. We took the 229 people and we repriced their credits as what they would get under the ordinance and added $48,000 approximately. We added $47,500 to get to this number, $736.17. And that's the number, the difference between the $682,142, which is on the second page, and the $736.17 is a pretty close approximation, I would say, within a few dollars of what we should be giving with the new ordinance, because we have to give credits under the new schedule. And I feel pretty confident with that number. So we added $47,500 to all of the numbers, and that's how you get this. And the reason the numbers that were on the first page are different is that there were more applications that came in. But we've repriced them all this afternoon, and I feel pretty confident about this, that we're all together.
Mr. Finger.
So you saying that the $730,617 amount is based upon 534 applicants from the first page, or 565 applicants?
565.
Okay, thank you.
I had 565 people I looked at.
Further questions on the numbers and or the motion? I'd prefer to stay on the numbers still before we get to the merits of the proposal. Sir, I think you're looking for planning and zoning. They might be upstairs.
Thank you. Okay.
Mr. Krummick.
Here's my thinking about why we should fully fund this program. As everybody here knows about the background of this program, but perhaps the people listening on Channel 79 and watching do not know. So I'll go into a little bit of history. We've had this senior tax credit program for approximately 8 years. When we originally priced the program, we thought we were going to spend $1 million on it in terms of by reducing tax credits. Over the years, for whatever reason, as it's been reviewed and amended, the amount of the program and the amount that we're giving seniors for tax relief has gone steadily downward from when it was originally proposed. So the selectmen, or the first selectman, put together a task force, and the task force took a look at this. And we also took a look at the tax credit program of other municipalities. And we saw that Greenwich's program was much less generous than some comparable communities. And some comparable communities go up to a household income of $75,000. In the task force and made a recommendation. The BET, the selectmen passed a form of ordinance increasing the credits for participants and also extending the income ranges to be eligible to $60,000. BET passed a version of this ordinance. Some of the main changes that the BET made was that we would budget a certain number, a minimum number for this program, but that at tonight's meeting, when we set the mill rate, we'd go back and we'd look to see the level of funding that the town can afford. Now, and the RTM passed the ordinance. So here we are. We are making a determination, what can we afford to do for our senior households in terms of tax relief in an ordinance that already is less generous than in comparable communities. It's not whether the people that are eligible for this program are worthy and deserving of tax relief. When the ordinance was passed, that decision was made. That decision was made, and we should respect it. So really the question is, I think I'm just going to anticipate that there's unanimity in this body in order to fund the lower income tax payers, the households $39,000 and under. I can't believe there's a single person on this board that would not fund that. So really, we're talking about the difference between the 730, 617 and the 910. And I submit in our budget and our mill rate calculations that we as a town, easily the wealthiest town in Connecticut, can afford to give our seniors tax relief. And I don't know what the numbers are right now. The old numbers said 214 in the 39,000 to 60,000 household income. But in Greenwich, Connecticut, a household income 39,000 to 60,000, certainly for the seniors that are eligible for this program, is one that needs this tax relief. And we hear all the time about the economic climate and how we have to, we have to cut back. Well, one thing we do not have to cut back is tax relief for the deserving portion of our community that is perhaps the hardest hit by the current economic climate. These are folks that are above 65. Most of them are living on fixed incomes. Most of them have seen their incomes reduced, I would imagine, just the way that we may have our 401ks reduced, but for many of these folks, their wealth has been, the wealth that they rely on to sustain them and to support them has been cut. So our town can certainly afford the difference between the 730, 617 that would cover everyone $39,000 and below, and we can certainly afford the additional amount that would be necessary to fund all eligible seniors. And I urge you, again, look at it from this point of view. We're not rewriting the ordinance. We're just making a determination right now what we, as the wealthiest town by far in this state, can afford to do for our deserving seniors.
Does anybody wish to follow Mr. Krummick on that?
On the other hand,
just to make sure we're all clear, the reason why the resolution was set up and established the way it is, and for us to have this meeting and the ability to set the tax rate at this time, was so that we could take it in the context of the mill rate calculation. In fact, when the ordinance was passed, it was passed with the understanding that, in fact, there was no guarantee of any amount. Certainly it allows for it, but that the calculation would allow for us to take it in the context of the mill rate calculation. That's what we're here doing today. The first year, I'll bet, and it seems to have jumped off the page and given us some good dialogue, which is a good result. In terms of the comments by Mr. Krummick, I think, in fact, in a fiscal year where there are 0% increases for the most part across the board, there are labor increases that have gone up, but certainly there have been expenses that have been trimmed. Let us not forget that, in fact, last year this amount was at $570. So going up to the level of a $39,000 income level already is potentially close to a $200,000 increase. And therefore, it's not like that's the jumping off point. That's the point of which we're already increasing this tax relief. And any taxes, credits that's given, just certainly comes from those others who have to make up the difference. And so in this particular year, I think, which has been difficult on all parties involved, and most notably those who have been laid off, and potentially more layoffs to come, I think we need to be cognizant of that. And this is just one aspect of that continuing discussion. Further comments on the motion? Let me just make sure I have this correct. All those in favor of setting or establishing a tax credit in the amount not to exceed $910,000 for the senior, pursuant to the Senior Tax Relief Ordinance, Section 12-6.1, signify by saying aye.
Aye. Aye.
Can you raise your hands just so I can get them? Kelly, Barton, Crumick, Raymer. All those opposed? Any abstentions? Caesar? 4-8-0. That motion fails. Is there another motion pertaining to the senior tax credit? Ms. Tarkington.
Yes, again, relating to the Senior Property Tax Ordinance, Section 12-6.1, resolve that the total abatement of property tax granted under this ordinance shall be an amount not to exceed $735,000 for the fiscal year 2009 to 2010. And again, to clarify this would be for filers whose income was less than or equal to $39,000.
It's been moved by Ms. Tarkington.
Second.
Second by Mr. Mason. Once again, just on a procedural note, this is, my understanding is that the $735,000 is a slight increase over the $730,617 found on page 1, which would afford those applicants with income levels of $39,000 or less from receiving a full credit. At least is the motion understood? Question on the motion. Mr. Raymer?
The ordinance, as I understand it, has a minimum, I think it's 570,000, has a maximum, and that is 0.5%, or the full amount of whatever the applications are, whichever those two numbers are less. Once the ordinance is written, I don't think we have the ability to gear it by the verbiage of the motion itself to the 39,000 and below. Our only province at this point is to set the dollar figure that we choose to fund. And if the dollar figure we're selecting by Ms. Tarkington's motion is 735, in fact, that may fund a few people beyond 39,000, or it may fund a few people short of the 39,000. But as I understand it, we're funding to the dollar figure because the ordinance is already in place.
In my discussions with the law department today, they in fact approved this type of motion in legal order, that in fact you can set a cap and qualify that cap by indicating the intent to attach to those areas of income levels. And so they did approve this resolution, although it's not, as I indicated at the beginning of this discussion, it's not what we had intended. And if we had the specific amount, we certainly would have put in the specific amount. But because of the situation that we're in, relative to the differing of opinions regarding the calculation of the tax credit, that this is the sort of next best thing, and that is in legal order. It sets a cap and then sets a qualifier to the cap that indicates simply that it would be that it's to be applicable to only those individuals who fall within the 39,000 or below range. Mr. Crumick.
My understanding, Jeff, of the ordinance is that if we don't fully fund, that in effect, the effect of this setting this limit would be only to fund the credits for 39,000 and down, because of the way when we passed the ordinance we set it up. What this means, and I think it should be clear to everybody, what this means is that 246 Greenwich residents who qualify under the ordinance, who have incomes that have been deemed needing property tax relief in our town, will be told, I'm sorry, the town cannot afford to give you tax credits. I'm sorry, the $180,000 that would be required to give you the tax credits, the town simply cannot afford. And I got to tell you, 100. I hear. Actually, I was going to ask Roland a question because $180,000, which is the difference between fully funding this program and only funding the lowest income ranges. In effect, repealing the move that we spent a lot of time on in order to make our program at least comparable to programs in other communities. Basically, we as the BET are telling our community that we can't afford to be that. We can only afford to deal with the very lowest, 39,000 and below. We can't afford to give any tax relief to people in households, seniors in households from 60 to 39,000. So it's 180,000. What's the mill rate effect of that per household? That's my question to Roland.
I agree.
It's $3. $3.58. So what would that break down to on the effect? I mean, you're basically talking about. You're basically,
Mr. Geiger, if you have an answer to that, that's fine. But I will say that I'm now going to find the comments out of order. That motion failed by a vote of 4-8 to 0. We are now on the motion for $735,000 in terms of a cap for the senior tax credit. And let's stay on that motion then.
Well, but that is Mr. Chair, if I may, at least we could know what the tax effect would be on the taxpayers. We're here that it's that they're saving. We can't afford this. We're saving money for the taxpayers. I mean, how much are we really saving them?
Mr. Kremick, we could take any item. We could take any capital item. We can take any position that we eliminated and simply incrementally add that to the tax base and say for that one project it's only that section up, and for some other project or position, well, it's only that much more. And I think that's a very dangerous game to play. And in fact, I think you're right in terms of the actual dollars amounts. The numbers speak for themselves. We were at 570 last year. The motion before us was 735, and the motion that failed was for 910.
Except that's what we're called on to do under the ordinance. This very thing.
Absolutely. And if we were called on, and if we passed a resolution that simply allowed this ordinance to go forward without tonight's meeting, then in fact we would have been saying we should fund it fully to the $60,000 amount. We did not vote on that, and neither did the RTM. What we did vote on was a meeting that would be held, as we're holding tonight, to vote on what the amount that we could that we think we can agree to in the context of the senior tax credit, and that's what's before us. Mr. Mason.
I don't want to interrupt too much on Mr. Kremick, but I think the way we're looking at this, and I don't think we're looking at it the right way. I think the Economic Times have had a number that we've been using of $570,000 for the elderly tax relief, and I think we included income ranges up to $39,000 previous to this, and we're trying to maintain consistency with the income ranges, and we're going up a significant percentage from $570,000 to $735,000. I think it would be, I mean, what are we going to say next when we get to our mill rate calculation? I mean, do we want to raise the mill rate for the senior tax when we've suspended jobs, we've suspended employment? I think we're trying to be somewhat consistent here. The program is a good one, but at the same token, if we're going to increase the mill rate for senior tax credit, well, what about people who lost employment? So I think I think there's a balance here, and I think that's what we're trying to strike. By introducing the new income categories of 39 to 50 and 50 to 60, that would be an additional program, and I agree some communities may have that, but it's not like we're taking a step backwards. We're at least being consistent in the income brackets.
Yeah, I'm supporting the motion as presented. I think that we had a choice when we passed the resolution, and one choice was to increase the benefit for those people at the lowest part of the income, and I support that. We're adding $160,000, and we added most of the money to the people making between $18,000 and $24,000, which I think are one of the most vulnerable parts of our population. We've increased the benefit to the people receiving tax relief by 30%, and as was repeated earlier, this was designed to give the BET credit of the resolution, decide where within our overall priorities. The first selectman proposed 570. We've looked at our budget. We've looked at where we are with our mill rate. We've raised it to 730. And I think this is a good number and supports, in my mind, given the difficult economic circumstance that everybody is under, tax relief of another $160,000 for those people that are seniors and I think economically most vulnerable, and this is why I support this motion.
Ms. Tarkington.
Yes, I just would like to comment again. I think Mr. Simon raised an excellent point, which I was also going to raise, that this amount does increase the amount dedicated to the seniors, $39,000, by basically over 29% since over what they had last year. Also, I think we disclosed in 2 different places, and there's a public expectation, both in our large one-page ad that's printed in March as well as to the RTM. There's an expectation that the number would be 570,000, although I agree with Mr. Crummick. You know, it wasn't that long ago that all of us passed this ordinance. And I think recently I was at something at the Senior Center where I learned that 18% of our town's population are seniors. So I think in addition to what Mr. Mason has said about many people, and Mr. Walko, many people having lost their jobs, many seniors that for one reason or another may not exactly fit this program but are suffering, as well as many other younger families. I think in this particular budget, it's prudent to try and maintain the mill rate as well as help the towns most needy, which I think this does.
Just in the audience tonight, also with us is Sam Deibler and Kate Brennan. Sam Deibler, the Director of Commission on Aging, and then the Chairman of Commission on Aging, Kate Brennan, along with Lori Jackson. Other comments, questions? All those in favor of the resolution for the tax credit of not to exceed $735,000 to be applied to those applicants with incomes of $39,000 or less, signify by saying aye.
Aye.
Opposed?
Nay.
Nay.
10-0. Ms. Barton and Mr. Crummick against. Does I have that right?
Yes.
Okay. Great, thank you. Mr. Simon.
I just want to make sure that that the assessor is clear that he's going back to reprice these credits.
I just throw it out.
Thank you.
Well, I was trying to, there was a lot of communication happening. Mr. Gwartney, so the beginning of the discussion, we talked about the difference of the numbers, one of the reasons why there's a little bit of a confusion here tonight. So you are going to go back and look at those applicants who applied last year to give them their full credit this year?
Yes, we will.
Okay. Very good, thank you. The last item on our agenda under new business, and the last item on our agenda, is the approval of the 2009-2010 mill rate. You should have all received an email today from Roland indicating the proposed budget for 2009-2010, and then at some point this evening I was handed a mill rate calculation dated 5/18/08 at the bottom, and then in our packet there is the mill rate summary that you should have all received, in addition to impact of mill rate changes on taxpayers, which is a one-page spreadsheet indicating the increase in the tax levy and the resulting decrease in the tax levy, depending on if you wanted to increase or decrease the mill rate calculation. This item was also discussed by our Budget Committee, and so at this point, let me open the floor to Mr. Mason, our Budget Chair, and then from there we'll proceed.
At first, I would like to offer a motion for the 2009-10 mill rate to be set at 8.316 mils, or 3.5% increase over the current 0809 mill rate that we have for the current budget. I would like to make that as a motion.
It's been moved by Mr. Mason. Well, there needs to be resolutions that go along with this.
Right, and they are here. They're part of the package, which the clerk would fill in the numbers.
So it's clear. The motion that is now before us reads as follows. Resolved that a tax at the tax rate of 8.316 mils on the dollar being the same is hereby levied and laid upon the assessment list of the town of Greenwich last completed as the tax for said town's general fund for the succeeding fiscal year, to wit, for the fiscal year July 1st, 2009 through June 30th, 2010. Resolved that the chairman and the clerk of the Board of Estimate and Taxation shall forthwith file a certificate of the levying and laying of such tax with the town clerk, who shall record such certificate in the town meeting record book and obtain a receipt from the town clerk that this has been done. That's the motion that's now before us. Is there a second to that motion?
Second.
Second by Mr. Stone. Discussion on this motion. Mr. Mason and then Mr. Kremick.
Thank you, Mr. Chairman and fellow members. In making this motion, we need to go back about 8 months ago where the BET offered guidelines. Those guidelines laid out our intent on what we were looking for in a budget from the appointing authorities as far as spending. And in that, we had offered to them that we wanted to keep the mill rate increases to the residents in the town, the property owners. Typically, we use the verbiage 2 to 4%, and historically, we've been running right around 3.5% each year. Well, we've accomplished this as a board this year. We've maintained all of our town obligations, whether it's fixed charges, our operating budget. We've maintained capital, our debt servicing. And to date, our residents, our legislative body, have been in support of our decision so far. Certainly, the RTM's vote last week would stand to that. I think it was 176 to 16. During the budget process, we had our public hearings. We were very involved as a board with the committees of the RTM, the districts, and the RTM as a whole. And I believe, although we had obvious questions about where the mill rate might fall, but I think the overall general feeling is that with an increased level of spending commitment would be of 3.5%, the mill rate would follow suit to that. And I think that was part of the sync of the conversation. So with that, I believe that the RTM removed $217,000 from a budget that would have had a 3.5% mill rate increase, and then we've just done an additional with the senior tax credit. So I think if I may, just a quick question to roll, and I think if we run this with that, it'll come out right at 3.5.
So that the $200,000 cut that the RTM made.
Correct. And that would be the position behind that. Thank you.
Mr. Kremick.
I move to amend the proposed mill rate to an increase of 3.99%, which is just within our 4% guideline cap limit. I do so because I believe that we have just passed and the RTM has just passed an extremely lean budget, which is not going to leave us sufficient fund balance and sufficient both for interims that I think will be coming because we were so lean in funding up, and also equipment can break down at odd hours and make strange noises. But the other thing is, so we passed a budget that has a very low, matter of fact, a negative fund balance, and that's very unusual. This has been a very unusual budget. We have passed operating budgets for departments that may be too low in order to maintain services, so we may have interims. And I think that this is the time, in this very unusual budget, that we as a BET have to function in a way that other boards perhaps cannot function, and that is, let's figure out what's in the best fiscal interest of the town. Next year, we're looking at and we're projecting a very difficult, very, very difficult budget, even given all the reductions in operating expenses this year, even given all the layoffs. And in order to smooth the tax rate, I believe we're going to need to have a contingency that we can fund at a 3.99 increase level. So that's my motion.
I second the motion.
Is there a second to the motion?
I just said I second the motion.
Roland, what would be the calculation for the increase, just so that we have our arms around the dollar amounts to this?
It would be, mill rate would be 8.356.
8.356.
The additional tax generated would be 1,351,000.
So once again, but to recognize you in 1 second, Ms. Barton. Mr. Crumick, my understanding then, based on this motion, would be that the estimated fund balance would increase. It just went down as a result of the elderly tax credit from 1.711 to what, Roland? Let's make sure we keep track of this number. I just want to make sure everyone understands what the fund balance would end up being.
The negative 1,576,504.
So that's where we started from, and then if you would add the 1.351 to that, correct?
Either that or we show it as a contingency.
Based on the amendment. Okay, fine. Ms. Martin, seconding the motion to amend Mr. Crumick's motion to increase the mill rate to 3.99.
I speak separately to indicate my concern about an additional item of the budget that I mentioned in March when we first passed the budget, which is my concern about the revenue estimates for the next fiscal year. I believe we're in about a $4 million hole in terms of estimated revenues based on where we're coming in this year. And I don't think we can afford to go into a very difficult year next year being $4 million in the hole. Now, maybe it won't be $4 million, maybe we'll be able to save some money, maybe the economy will get better, but I don't think so. But we certainly do need to have some level of contingency. And although I think $1,351,000 is a little bit light for that contingency, I'd be prepared to support it, which is why I seconded Mr. Crumick's motion.
Just to frame the discussion, we're going to take all items relative to the motion to amend. We will vote on that motion to amend, and then depending on how that motion goes, then revert to Mr. Mason's motion. Mr. Raymer.
I'm speaking in support of the amendment that was proposed at a 3.995, I think it is, percent increase. Certainly the increasing of the contingency is the strongest single reason to have a slight increase of mill rate. But there is another factor out there looking at us for the following year, and that's a pension obligation. To the extent that we're so lucky as to not need these contingency funds, to the extent that we're so lucky as to have some improvement in the economy which gives us new revenue sources that we have no right to presently predict, we certainly have a large demand looking at us in fiscal year 11 to contribute what might be as much as $10 million additional at that time. I did some straw arithmetic at one point. I can tell you that if we had to pick up $10 million in the following year, even if our grand list increased by 1%, which is more or less what we've experienced, and even if all the rest of our revenue sources went forward exactly as they are today, meaning no further sink but no improvement, we would have to have a 7% increase in mill rate in the following year for fiscal year 11 to cover a number like $10 million, if that's in fact what we have to face. And I think out of simple fairness to our tax-paying public, it's not fair to roll forward at a 3.5% increase this year, fool them into thinking that everything is happy, and then slap them with a 7% increase in mill rate later on. So I applaud the idea of having this a little additional contingency, and if in fact we don't need it as a contingency, I have clear view of where we are going to need it in fiscal year 2011. Thank you.
Mr. Finger.
I too speak in support of the motion. I think it would be irresponsible of a finance board such as ourselves to enter into a year where we all understand the expenditures are very tight, the budget is very lean, and there's no contingency. By the suggestion that we increase the mill rate to create some level of contingency, we're not authorizing more expenses. We're just protecting ourselves if there are unforeseen expenses, or if for some reason some of our assumptions on revenue, whether they be conveyance tax revenue, permit fee revenues, or interest income, if they should fall short, we have some room to be able to cover those deficiencies.
Mr. Simon.
Although I'm sympathetic to people's talk about the contingency. The budget is very tight, and there are needs that I think will come up during the year. But from my perspective, it's important to balance the tax increase to the citizens and the residents versus the need for the contingency and where we do on the budget. As being part of the whole budget process for the last 10 years, I feel very wedded to the 3.5%. But in this case, I'm going to, if this motion fails, going to offer a second amendment, which will be for a 3.75% increase, which will yield a $700,000 contingency. There are arguments to be made that it is within the town's fiscal prudence to have some reserve set aside, and if this motion fails, I think that balances the town's fiscal needs with the needs to limit the amount of tax increase to the residents.
Mr. Mason.
Can't have them all at a time.
as the town progresses, that will begin, tomorrow, looking at services and spend rates, etc. So I would encourage everyone to stay with the 300% voting. It's just a message that I think
Yes, Mr. Chairman. I understand the need for a contingency, and normally I support a contingency because I think it's only prudent. And we, considering the situation we have presently, we have a very substantially reduced economic situation. And I'm also going to speak from the standpoint of having spent 28 years in the RTM. And normally the RTM, when it considers its budget, takes its lead from the BET and the proposed budget that comes out of this body. And it seems to me that the RTM, in its deliberations a week ago tonight, projected that there would be a mill rate increase of no greater than 3.5%. And I think that if we were to do anything that increased the mill rate more than 3.5%, then we have, in effect, compromised our relationship in many ways with the RTM, who only reduced the budget $217,000 because I believe their expectation was that the BET would increase the mill rate only by 3.5%.
I also attended RTM meetings, district meetings, and committee meetings. I did hear one or two people say there should be a 0%. But if we get anything from the RTM's approval of the budget and approval of the 3.5% mill rate increase, it's that they understand that we came to them with an extremely lean budget. They realize that 0% is a cut, and 3.5%, maybe we can keep the level of services. But the problem is that this budget, more than any other year budget, we haven't left enough of a cushion for, we've actually, for the first time in my memory, we're projecting a negative fund balance, which probably will end up with some money. Well, hopefully we will do better than the negative fund balance that's projected. But we haven't left enough cushion. We have done a good job of leaving cushion for capital. I'm not worried about capital. We've got capital non-recurring. We've got our capital plan. We've done a good job on that. What I'm worried about is operating. And what I'm worried about is fund balance going into what we know next year is going to be a difficult year. And one of the things that this body does, and it's a responsibility that we have that the RTM doesn't have, is when we set the mill rate to decide whether we have left enough of a cushion and we've done the responsible thing. We're not talking about a great deal of money, again, in terms of increase in the mill rate compared to the overall budget. As a matter of fact, the difference between what I propose and what Larry has talked about is a few $100,000. But in terms of smoothing the tax rate and in terms of making sure that we have sufficient funds to cover interims that I believe we are going to have, given the lean budget that we've passed, it's our responsibility to look at the mill rate, not to be hostage to this 3.5. The problem with the 3.5 is it becomes like a political thing. Well, 3.5, we can brag that we've kept it at 3.5, but remember, our guidelines were 4%. We're still at 3.99, or at Larry's figure, well within our guidelines. And I think the expectation is, and should be, at the RTM and among the citizens, that the BET, when push comes to shove, will do the right thing, the fiscally prudent thing for the town. And I think the fiscally prudent thing is to set a mill rate that provides us with the cushion that we don't have right now.
Just to clarify, I just want to make sure this point is made, that this budget reflects, as presented based on the documents that Roland provided us at the beginning of the meeting, with a fund balance in the positive of now $1.5 million.
No, negative.
Negative. The negative on the sheet compared to the budget. It's negative on the budgeted sheet of 1,576, which adjusts for the elderly tax credit that we took up. Other comments? Mr. Stone.
We received approval from the RTM last Monday evening for a budget based on which they expected that we would be increasing the mill rate by 3.5%. They and other townspeople are under that impression tonight, prior to our vote. We have a covenant to deliver a budget and a mill rate increase at that level. It's clearly within our power to assault that, and if we did that, we'd be sending a message that we were not able to live within the confines of a budget which admittedly is quite tight, but one that we developed within a fairly short period of time, which was much tighter than one that had originally been envisaged when the initial set of guidelines had been deliberated last October and November. We've begun already the process of thinking about the following year's budget. And by changing this mill rate that we had anticipated and our colleagues on the RTM anticipated, and many throughout town anticipated, and in some cases already feel is somewhat higher given the economic climate, we're certainly sending a mixed signal. And I, for one, choose not to send that signal. I think we're going to be able to live within this particular, admittedly tight confine. To add any dollars right now doesn't give us much leeway given the full size of our budget, and more than offsetting the possible budgetary cash flow leeway it would give us would be the signal we'd be sending to our townspeople. So I would oppose the amendment.
I'm just trying to go in some sort of order of someone's, Ms. Barton and then Mr. Raymer.
I'd just like to respond to the suggestion that there's been some kind of covenant that might be breached by assessing a mill rate that some of us at least believe is responsible. It has always been the case that when the budget is passed, it's passed. Sheets get passed out that illustrate its impact. It has always been the province of the BET at this meeting, not at the original budget meeting, at this meeting, to set the contingency and the mill rate. And people in town know that. If they've been misled, that it has not been by people who have been speaking on behalf of me in particular, and I don't believe people have been misled. I think they know that it is up to this body to set the responsible mill rate. We can disagree on what that is. That's fair. But I don't think it's fair to say that we have some kind of covenant that we entered into unknowingly in March that binds us in May, and I reject that argument.
Mr. Raymer.
Among the covenants perhaps that do get made are labor contracts, some of which are coming to an end, I believe, at the end of June. There's been a hard process between us and our employees over the last 8 months with layoffs, and that certainly has been a very painful experience. We've turned to our unions. We've asked of our unions to accept wage freezes as we renegotiate these labor rates and we go forward into the new labor contracts with substantial unions. what we're going to be saying to them is that for the last 10 years, we've had 3.5% more or less tax increases. In this very tough year when our revenues were down from several sources, guess what we had? We had another 3.5% increase. So it looks like none of the pain has been inflicted upon our taxpayers. For them, it's been business as usual. And now we're going to expect that the heat's going to be taken by our labor force, and you expect them to give you wage freezes, layoffs and the like when you perhaps are not sharing the pain with them. I think you'll do better with your union process as you renew these agreements coming up to the end of June if you've shown that while you were taking pain, we're stepping up with a small tax increase, we're sharing a part of your pain. Most particularly, I don't want to be repeating myself, but I'm very concerned about the assurances I'm hearing from our budget chair, Mr. Mason, that we're looking at the pension and the like. You know, look at the pension all you like. I'm very fearful that, once again, if we have a 1% increase in our grand list, if our revenues remain otherwise as they are, if our general costs, generally speaking, increase by 3.5%, you're going to have a 7% increase going into fiscal year 11. And I think that has just been a shell game with your taxpayers, that in this year, which maybe you view as an election year, you want to have an artificially low figure for the purpose of concealing from them that you're going to have a stiff increase as we do this process 1 year from today, and that's not fair.
Mr. Campbell.
I don't want to comment on the labor union negotiations, but to Mr. Raymer's point about 3.5% as being business as usual, and that the taxpayers would get off easy. I object to that strongly. I think Greenwich taxpayers are hurting this year. The community's hurting. We all are throughout the country, throughout the state of Connecticut. I think many communities have lower tax increases this year than they have traditionally had in the past. I certainly, when I voted for a budget, I felt that this board had worked very hard to limit spending as best that it could, but I did so with the understanding and the expectation that we would not be increasing taxes on Greenwich taxpayers any more than we have in the past. And I frankly am not comfortable raising them 3.5% this year. But I certainly am not comfortable, and I certainly could not support any amendment that would represent what I believe would be the largest tax increase in 10 years on Greenwich taxpayers. I don't think that's something that this board should support tonight.
Mr. Kelly.
Through you, Mr. Chairman, maybe I could ask Mr. Mason or Mr. Crummick. I understand the pension argument. I understand the union issue. I understand that we have money in capital contingency. The interim is where we're lacking the contingency, and I'm struggling with that particular issue because I'm trying to get some interim ideas where I would have a problem. We would need to raise money. I mean, the highway is, you know, if we had we had too much snow or something, we'd have an operating deficit in the Public Works Department. How would you Mr. Mason, how would you address some of those issues if they come forward, those interims? I mean, let's talk on practical terms. I mean, we've all talked about the 1.3, the money, the tax rate, and everything else, but let's talk practical terms. If these come, if he could, if he wants to.
Mr. Mason.
Okay, so let's run it.
Because I'm really on the fence. I'm telling you.
And I've known you long enough to know that you're definitely look at this. Let's look at it. We just had an interim in tonight's call for snow removal.
Right.
The department went inside their budget and asked us for transfers.
Okay.
They had it $300-something thousand
right.
to cover the snow, and as you know, this winter. Not that it was a lot of snow, but it was all weekends and holidays, so they
right.
covered it. Interims are based on, the budget works like this. In the next month, we're going to close out capital. Any projects that are not committed, or we're going to close out, the surplus from those appropriations lapses to capital non-recurring for future appropriations. The town has an encumbrance policy, which the Finance Department under, slightly before I got there, but Mr. Simon and a couple budget committees before have tightened up the encumbrance policies to where the departments are still returning annually dollars and cents. Now, we have an estimate this year we have the capital sheets getting ready for next month. And what do you anticipate the return this year? About $2 million coming back in. And we also have Cascade Power Plant appropriation coming in, correct? If I'm not mistaken, I'm sorry to speak directly to you, but
We're hoping,
yeah, we're hoping that comes in. Okay. With that being said, that money reverts back to the general fund. And there you have it. That's your start of your interim appropriations. From there, the budget process for interim will follow by what the appointing authorities are currently doing, such as Board of Education in reducing their operating. They're doing a few more transfers, but they're working on reducing their operations. Office of the First Selectman came out. The town, well, if I may, the town this year will spend, is it $12 million less than appropriated? $9 million less than appropriated. That is really how it works. I mean, that's how the budget works. In some cases, in prior BETs, when we used to have the old Donald Landsman reserve for contingency, it had to go back for appropriation anyway. They did it that way. This forces the departments to work in and amongst themselves. And to add to your thought, just to see if to help the thought, the labor contracts, and I really don't want to go into those either, they're significantly up over the last 10 years, up 35%. The taxpayers are up 35, actually compounded 41.5% over the last decade. Everybody's taking a hit on this one. This is not just the taxpayers taking their share. I mean, everybody's homes are down in value, business, commercial properties down in value, rental value is down. So this is a fair step, and I agree with Mr. Campbell 100%. Is this the year that we want to step above what has been sort of stable and predictable taxes to do that hit? But as far as there could be things that do pop up, yes. I mean, there could be major sewer break, but we should have it sort of planned out so far. It's tight, but if that helps.
It does. Thank you.
We'll get to everyone. I just want to give everyone a status of where we are in the discussion. As I look, Mr. Mason made the initial motion, which was seconded by Mr. Stone. Since then, we've had 14 comments made, or 14 speakers on the amendment. Mr. Finger.
If we increase the mill rate to the 3.99% as the amendment would have us do, it's not, as I said before, it's not a desire, at least on my part, and I think on anybody else's part, to increase spending on the town's part. It's to be prudent and make sure that if, as Mr. Mason said, there's a sewer main break, or if we have snowfall that even exceeds what we had this year. I mean, we're not going to have the same flexibility next year as we had this year within departments to do the interims by, moving from one code to another code or one line item to another. The budget is very, very lean. This board, the budget committee, worked exceedingly hard to, and the first selectman, to rein in expenses, to really force all the appointing authorities and department heads to look very, very closely at where they can cut their expenses but still provide a level of service that would be acceptable to the residents of this town. That's what this budget does. By increasing the mill rate to provide a contingency, again, we're being prudent. If that money is not needed, it's not going to be spent. It's just there to be used next year in our fund balance. So I think that it would be a tragic mistake if this board felt that the outcry of the supposed outcry of the community to keep it at a 3.5 mill rate was because they wanted us to be fiscally prudent. We were fiscally prudent, and we will be fiscally prudent if we approve a contingency. If we don't approve a contingency, I think then we run the risk, and we should be considered being fiscally imprudent.
Mr. Kremick.
Yeah, I just wanted to, Bill, if I could just reply to your point. But it's going to overlap with what Bill Finger just said. We were very successful, and the first selectman was successful, and we wrung a lot of I won't call it fat because it really wasn't fat, but we reduced this budget and our expenditures tremendously. We eliminated positions, a lot of positions. The Board of Education eliminated a lot of positions. We used conservative estimates. We used, when we could cut, we did cut. And the plain fact of the matter, and this is my concern, that all the things we used to use for, a lot of the things anyway, we used to use to fund interims will not be available next year. We know there are some interims that come up every year, or at least often enough that we know that they're gonna come up. This year there are a lot of unknowns. Like just throw one out, for example. We don't know what our public school enrollment is going to be next September. We do know that because of the economy, there's an anticipation that more students are going to end up in the public school system because fewer students will end up in the private school system, either because, we do know that now, but we won't know until September, for example, what the enrollment really will be. We don't know on a number of things what the increase would be. And all I'm saying is, and whether it's at a 1.3 as I propose or 700 as Larry proposes, our budget is so lean that we do need, I believe, to put a cushion back there, not necessarily to increase expenses, but to deal with the interims that we know are going to be forthcoming, and that where there isn't the flexibility in the budget that there had been in prior years.
Steve? I'm sorry, I don't believe we're all that far apart as I hear these comments, although it would seem we're at least 0.5% apart. Is there any way, say we approve this money, do we have anything like the lockbox? That, for example, we couldn't spend this $1.3 million unless we had a 12-0 vote. I mean, I think all of us are very reluctant. What I'm reluctant to do is release any good pressure on the operating budgets of the departments by saying we have a $1.3 million contingency, and therefore our knee-jerk reaction is to do an interim and not have them really pursue their budget and look deep within their budget to finance it. And I think that's where a lot of us are. We all want to be prudent with respect to this budget, but we also don't want to make it easier to come for interims. I mean, that's the struggle I'm having, and I think it's reflected in a lot of the comments here that we've made. But I don't know that there's such a procedure that we could employ here. I doubt that there is.
Based on my understanding of setting a mill rate, that has never been developed. Certainly I'll defer to Mr. Krummick and Mr. Simon, whose tenure on this board outlast mine. But I would argue that that's cumbersome and
probably illegal. But I
hear your thoughts, though. I mean,
I'm just trying to think this out loud. As what we're trying to do here. I mean, I agree with Mr. Stone, with Mr. Norton, with Jeff, Mr. Raymer. I mean, they're all making very valid comments about this difficult decision that we're about to make and impose upon the town. And I struggle with it because of that. I think we've done a really good job. I think Peter's done a good job with respect to the departments. And you want to keep that tight. You don't want to loosen it up, but you also want to be fiscally responsible. So I don't know. I'm struggling with both sides here, and that's all I have to say.
I appreciate that, and hopefully the words of wisdom from your fellow members will help persuade you one way or the other.
Thank you all.
That said, I think we're now up to about 16 or 17 speakers on this amendment. I think this is ready to go to a vote. I think everything's been stated and quite well. in terms of the philosophical difference, I would say, as to whether or not setting the mill rate at 3.99 or keeping at it at 3.5. So before us, just to be clear, motion by Mr. Crumick, second by Ms. Barton, to amend Mr. Mason's motion, which was seconded by Mr. Stone, to a mill rate increase of 3.99%, which would yield a mill rate of 8.356, which yields an additional amount over the 3.5.
$1,351,000.
Right. Do I have that right?
Yes.
All those in favor signify by saying aye.
Aye.
Hands up. 1, 2, 3, 4, 5. Opposed? Abstentions? Fails. 5, 7, 0. Raymer, Finger, Barton, Crumick, Kelly. I have that right?
Yep.
Thank you. That motion fails. Mr. Simon?
I'd like to make a motion to amend the resolution that we have a mill rate of 8.336 mils, which is an increase of 3.75%, which yields approximately $667,000, but I'm waiting for the finance person.
Second.
Even? 677,500.
How much is it?
It's been moved by Mr. Simon, second by Mr. Crumick. On the motion to amend Mr. Mason's motion, second by Mr. Stone, to increase the mill rate to 3.75% to 8.336. Discussion. Mr. Norton.
Mr. Chairman, this sounds like a repeat of what we just went through with a increase of $1,300,000. So are we going to hear another 15 minutes to discuss $677,000? Or
Actually, Mr. Norton, Mr. Mason, before you could even say anything, called the question, but I was just entertaining your comments just because I was trying to be polite. So,
if you just prolonged the discussion,
but thank you for your comments. All those in favor of increasing the mill rate to 8.336, which is a 3.75% increase, signify by saying aye.
Aye.
Opposed? All right, hold on. Ayes again. Raymer, Finger, Simon, Crumick, Barton, Kelly. Opposed? Abstentions? 6-0. That fails. Are there any other motions or amendments to Mr. Mason's motion for a mill rate increase of 3.5%, which would yield a mill rate of 8.316? Mr. Crumick.
I'm going to vote in favor of this, although I don't think that it's the right amount.
Any other amendments, I guess, or discussion points? Question by Mr. Norton.
just call the question.
All those in favor signify by saying aye.
Aye.
Opposed? Ms. Barton. 11-1-0, is that correct?
That's good.
Thank you. Our work is not yet complete. We have to sewer maintenance fund. You should have all received a copy. Can I hear can we waive the reading of this resolution?
Yes.
With the, may I have a motion for a tax rate of 0.374 mils for the sewer maintenance fund? Moved by Ms. Tarkington, second by Mr. Norton. Discussion? All those in favor? Aye. Opposed? Abstentions? 12-0-0. The Sewer Improvement Fund. Can I waive the reading of this resolution? Yes. A motion for a tax rate of .055 mils for the Sewer Improvement Fund. Is there a motion to that effect?
So moved.
Second.
Moved by Ms. Tarkington, second by Mr. Mason. Discussion. All those in favor signify by saying aye. Aye. Opposed? Abstentions? 12-0-0.
I think so.
Once again, Mr. Kelly, do you have a comment?
I just, new business, I just want to convey to the chairman, I've been contacted by the Board of Ed with respect to the negotiations that are starting with GOSA, and that you need to appoint someone to those negotiations, all right?
We have that assignment. We also have the assignment for the health dimensions. I know the one caucus has provided names. We'll get the names from the other caucus. There's some other assignments that are out there, most notably the sewer, the stormwater management. I promised Peter Quigley that I would appoint 2 members to deal with that issue. I believe I have 1 member already assigned, and we'll get for another member. Once again, thank you, everybody, for working on the budget all the way through from September to today. We certainly have our work cut out for us, and do not forget that June we will start the meeting at 5:30. Thank you all. Good night.
Motion